Chapter 15 is going to be about adjusting entries. We did adjusting entries when you did your cycle for proprietorship, and we're going to do them again for a corporation. They're a little bit different, a little more in depth, a little more detailed, but that's what chapter 15 is about. So we're getting ready to start doing the end of the fiscal period steps. So just like we did in the first cycle in part one, some accounts need to be brought up to date at the end of the fiscal period, and that's what adjusting entries are all about. So in part one for the sole proprietorship, we used a worksheet and we planned adjustments for supplies and prepaid insurance. We are going to do those adjustments again. We have a couple of other adjustments that we're going to add in. So these four down here, we will cover merchandise inventory and interest receivable in lesson 5.2, and accumulated depreciation in lesson 5.3, and federal income tax payable in lesson 5.4. The main difference is that when we did part one and we did those adjustments, we did them on a worksheet. So we did our trial balance on the worksheet where we listed all of our accounts and their balances, and then the next columns over where you did your adjustments, and then where you extended them for your financial statements. For a corporation, we are not going to use a worksheet. We are going to do an unadjusted trial balance, which is its own financial statement. Basically the same concepts, just not using the worksheet like we did for proprietorship. So you start out just like any other financial statement, and you're going to do your date, your heading up at the top, the name of the company, the name of the financial statement, it's an unadjusted trial balance, and the date. These are going to be the balances that are in your ledgers currently. So you're going to list all of your account titles, and then you're going to enter the balances. If they're a debit in the ledger, they're a debit on here. If they're a credit in the ledger, they're a credit on here. The whole point of this unadjusted trial balance is to make sure that your debits and credits are equal, just like it was on the worksheet. If they are not equal, that means you have a mistake, either in your posting or in your journalizing, or in bringing the information over to the form. So if these do not equal, you cannot move on. You have to stop and you have to figure out what your mistake is. So once you have those equal, then we have to do our adjustments. So in this lesson, we're going to look at supplies and prepaid insurance, just like we did in part one. So there are four questions basically that you have to look at. The first one is, what are the balances of the accounts that are being adjusted? What should those account balances be? What has to be done to make them correct? And then what adjusting entry has to be made. So in part one, we use that worksheet again. I keep saying that, but we're not using that worksheet anymore. So I want to make that clear. So we're going to do those adjusting entries directly into the journal. So when we look at the supplies one, with the corporation, a lot of times they will have multiple supplies accounts. So for 3 Green, which is our example company, they have a supplies office and a supplies store. So they break out the supplies that they purchase for using in the office and the supplies that they use in the store. And so they have 2 supplies accounts, supplies office, supplies store. So what are the balance of the accounts being adjusted? Supplies office account is $45,48.17. Supplies store is $5,049.61. What should they be? These are the balances that they should be. Remember, just like we did the activity in class where we did you counted up all the inventory for adjustments or for supplies, and then you did the adjustment. That's basically what they're doing. They're doing a physical inventory at the end of the fiscal period and find out that these are the value left in those supplies accounts at the end of the month. So we got to make supplies office, which currently has a $54,48.17 balance, we got to make it show 610. So what do you have to do to make it show 610? You have to decrease it by $3,938.17. And for supplies store, since supplies are assets, supplies office, supplies store are assets, they have a debit balance. To decrease them, we have to credit them. And then the debit side of those transactions is our supplies expense office and our supplies expense store. So when we go to do the adjustments in the general journal, Again, you would have the heading up here. They don't show it, but you would have that heading that says adjusting entries centered on the line, and then you do your transactions. They do the supplies office first because alphabetically in your list of accounts, in your chart of accounts, office is going to come before store. So that's the only reason office is first. So you do your adjustments. These are the amounts that you're adjusting for that you figured over here. And you record those adjustments. So once you have the supplies adjusted, and depending on the corporation, there could be one supplies account, there could be multiple, could be more than two. So however many you have. So you do your debits and your credits and your amounts. Then we're going to adjust prepaid insurance, just like we did first semester. So this is telling us that the value of prepaid insurance at the end of the month should be $2,800. When we look at our ledger, the balance of prepaid insurance is $11,000. So we have to make it show $2,800. So 11,000 minus 2,800 is 8,200. So we have to do that adjustment of 8,200. Again, prepaid insurance is an asset. So to decrease it, you have to credit it. And then the debit side of that transaction is the insurance expense account. And so you do your date, your debit, your credit, and record your journal entry for prepaid insurance. So those adjustments are almost identical to what they were in part one with a proprietorship. The only difference is we're not using a worksheet. We're doing them directly into the journal.